As the prophet of esports, I rely on trustworthy and meaningful data every day. Data from our research partner, YouGov, offers the most complete view of esports fans and gamers in the world, providing context to who they are, what they think, the brands they buy, and things they do. YouGov's connected insights and research services inform strategy at every level. If you're a team, a brand, agency, or rights holder, you should be talking with YouGov. Their partners measure and maximize ROI and are telling compelling stories with data. Visit yougov.com/gaming-esports to learn more. I was surprised how much they're making on content, frankly, because they separate that out for whatever reason, content from brand sponsorship. It's a third of their revenue for 2020. I thought that was interesting.
I think FaZe is one of the few teams that's, focused so heavily on content. Like, I think
they are.
As much as we've seen them not find a lot of competitive success in the last couple of years, like YouTube is their game, and YouTube and Instagram, they've got on lock. Like,
I have a thought on that, and I don't know if these are defined here, but is it possible they have a big roster of content creators, right? Like, is it possible that brand sponsorship is anyone, like, okay, Nike signs a deal with FaZe, like pays them X million over this period of time. That's brand sponsorship. But content is like whatever Kyler Murray like streams and gets like subscribers or whatever, like Twitch revenue, that goes into the maybe that goes into the content bucket.
What's interesting is maybe even hoodie org for FaZe is not a fair assessment, right? Because if we look, and let's look at the easiest to view bar, where they see the business in 2025, right? If you look at consumer products, there's no number here, but this light gray area that my mouse is over is a relatively small piece when you look at the size of the other bars, right? Like, hard to say hoodie org if they believe hoodies are only sort of this relatively small section. It seems like they're expecting far more revenue from what they're saying is M&A. Who knows what that's going to be?
It's kind of a big red flag.
that is potentially a big red flag. And content looks like it's the second biggest bar, right? So they're fundamentally not even they're barely they're maybe not they're a media company then, essentially, based on that. If you look at the breakdown here, not a hoodie org even in this context.
It's crazy too, because that's how, FaZe Clan, like, even it, forgive me for prying, but like the name of the deck is Project Trick Shot, like FaZe Clan back in the day was all trick shots and content and YouTube kids. Like, it's crazy that they've managed to continue that sort of branding into this day and age and still find that sort of success on such a wide scale.
They were never really a competitive team. I mean, they got into competitive esports because esports was like this buzzword for the last 3 years in the gaming community. But like, to Jimmy Mondo's point, FaZe was a trick shot group. It was a lot easier to just post these cool sniper kills and then grow a following on YouTube than it was to do anything else. They weren't a hoodie org. They were a content community. Whenever I would talk with Lee Trink and Greg Selko before he started Xed and others over there, and I would ask about intents to expand into this esport or that game, they would always kind of brush it off and be like, we're really focused more so on content and media. That's our bread and butter. So it doesn't surprise me that that's a focus here in this deck. What is surprising is it's so much larger than I anticipated, because we do focus a lot on the hoodies and on the other things that are more funny and fun to poke at. But to be fair, bread and butter.
They're still saying they're going to sell $50 million of hoodies in 2025, which is a lot. It's a lot, right? They're saying their hoodie business is going to grow. What is the math here? 7x? Seems hard to believe. It seems somewhat questionable. They say they're going to do $178 million in revenue from M&A. And they're saying 3 acquisitions to be identified in the future. That's an oddly specific revenue number, given that it seems the targets haven't been identified. And then the last comment I would have here is just that, the growth in some of these bars feels like, again, like everything has to go perfectly, right? Like 10x more than 12x the revenue on content in the next 4 years feels feels fast. Feels
Well,
fast. So
it also feels like that fintech story that apparently got backed out, 3 years later with this unidentified partner. So are we going to see another one of those? Oh, remember those projections and that revenue? Well, that's not happening, and we're not listing what the target was, anyways.
having said that, I think the flip side of this is if you have investors are obviously buying into this story. I think it shows the power of kind of that media business story, right? That there's clearly excitement around these kinds of stories. People believe that the next gen media companies haven't been built yet, and maybe FaZe is one of them, right? That I think this is part of the excitement around this.
I mean, there's no denying it's a really, really strong brand, but we've also seen them make a lot of mistakes, right? With founders that they removed for crypto pump and dumps and other things. So I don't want to throw dirt on their name. I just want to say, like, I'm just still very hesitant about all of this.
I'm going to get to that, Jimmy, in a second here. Let me just read some of these comments, and then we're going to get to that point specifically. Bruno says, what has to be the multiple on hoodie sales to get to that valuation? Well, they're already trading at a significant multiple to their hoodie sales. So, the multiples I sort of don't mind. And I think, Jeff, you said this, right? It's not crazy. They're not. In a world where you believe that you're going to see massive growth and the industry is going to grow massively, is the valuation rich? Yes. Is it defensible? I think it is, right? There's absolutely a way to defend this and say, look, if their revenue is growing the way they're going to project, then they're definitely going to grow into that valuation with no issue. Greg says, have to assume FaZe reviewed all different options to monetize. It's like ordering dessert and choosing the butter cake. The SPAC was their best choice. Greg.
I'm not sure I would ever describe a SPAC as a butter cake. But maybe the Trump SPAC, but that's the only one. Not for political reasons, strictly for monetary purposes.
Chris says, well, this is a good follow-up to Greg's point, which is, serious question, would it be valued at $1 billion if it wasn't a SPAC? Jeff, good question for you. Could FaZe have gone public without a SPAC? Could they have just done a normal IPO?
Given like the current landscape around SPACs, which is a little bit negative, like SPACs had a massive boom earlier in the year where it kind of almost, to some extent, I think overtook IPOs as like the preferred route to go public, even though historically it was not. I think that bloom has come off a bit. I don't know actually much about the SPAC backers. I guess it's B. Riley, which is a decently respected investment bank. But it's not exactly like this was, Mark Cuban SPAC or something like that, or someone who's going to add a lot of value. Just threw that name out of nowhere. But so I would think that, they would have probably preferred an IPO. It's hard to say without knowing whether they would have gotten the $1 billion in the IPO. I would say another red flag, just in looking at the deck, I don't know if they announced the investors in the pipe round. I think that's typically something that gets announced, and the quality of the investors in the pipe round is usually something that people look at to say like, hey, these guys have institutional support. And the fact that they didn't announce like, hey, Tiger Global and Wellington and KKR, whoever, invested in the pipe, kind of leads me to believe that maybe it wasn't the best quality investors in that pipe, or that the pipe's not committed or something like that. And to be fair, maybe all that's in the press release and I glossed over it. So if that is the case, strike that from the record, but I didn't
It wasn't, Jeff.
Which is important. I think is important.
So are you saying then that the SPAC feels like to you, this was a plan B for them?
Probably, yeah. Or opportunistic. Maybe they hadn't. The beauty of a SPAC is that it's a quick route to go public. So, I mean, it's possible that this SPAC was just looking for assets and kind of went to FaZe and was like, hey, we'll put $1 billion valuation on you, get you public. And FaZe was like, wow, well, we had been looking to raise capital at a $600 million valuation, but that sounds a lot better. Like, let's go do that. So maybe it was just opportunistic on FaZe, but I doubt they were both evaluating an IPO and a SPAC and chose, willingly to go down the SPAC route.
Let me just read some of these other comments here. Alex says, didn't Luminosity reach $1 billion in valuation after they acquired Vancouver Titans? Alex, not Luminosity, Enthusiast as a whole but definitely not Luminosity specifically. And now Enthusiast, their stock has taken a bit of a beating. Their market cap's back down to around $500-600 million, I think. So this is definitely the first standalone $1 billion esports org, not Luminosity.